You're welcome to another class on financial reporting. Last week, we finished up on IAS 16. Last week, today, I feel I should move on to IAS 38 on intangible assets. Let's move to IAS 38 quickly. This is a very short standard that we can finish very fast. Then we would see what next we can do. And probably maybe I'll teach you financial instruments next before moving to impairment of financial assets. Then before finally moving to, I think I'll teach you a lot of standards before I teach you group accounts. So let's move to IAS 38 on intangible assets. I can remember last week that I gave you some assignments. Some of you have submitted. Quite a number of you did not submit. That's not a good sign. That's not a very good sign. I think we can do better, and I hope you do, because we're going to be moving at the speed of light in terms of the quantum of the knowledge you are going to be getting. So it's important you're checking the boxes gradually. Otherwise, you can get lost in between. So if you have, share with me so I can send you the solution. If you have not, you need to go and do it this week. You don't know how important it is to get it done. Okay. IAS 38, intangible asset. First, for this standard, we are going to be looking at some issues. Number one, we'll look at definition of an intangible asset. Then I will look at recognition of intangible assets. Then measurements of intangible assets, disclosures, then past corrections. Then probably maybe we'll end it for today. Then tomorrow, I can then start financial instruments with you tomorrow. So what's an intangible asset? By definition, according to IAS 38. IAS 38 says that an intangible asset is an identifiable non-monetary asset without physical substance. It says an intangible asset is an identifiable non-monetary asset without physical substance. So everything here is very, very important. Identifiable non-monetary assets without physical substance. So the first thing here is identifiable. What do we mean when we say an asset is identifiable? When we say an asset is identifiable, it means that the asset is separable or arise from legal rights. From legal rights. The asset is separable or the asset arises from legal right. And this also simply means that this asset can be sold separately from the organization. This asset can be sold separately from the organization. So, example of intangible assets arising from this separability are assets like license. When you have a license is an intangible asset because it's separable. You can sell your license to another party without selling the entire company, or even patents. When you have a patent or you have like an invention, something like that, and this invention you decide to patent it in such a way that no other person can claim ownership over that invention except you. That anyone that wants to use it must refer to you, something like that. That's patent. It is an intangible asset, and you can decide to sell it. That's separable. So when we say an intangible asset is an identifiable, that identifiability can mean that you can sell it. Another one is that it can arise from legal rights. Legal rights. So examples of intangible assets arising from legal rights is basically a franchise. Franchise. You see, when you have a franchise, it means that you have a name that you have acquired from another entity. For example, you run an Apple store under a franchise arrangement. So Apple has given you the authority to use their name in front of your shop. I'm sure they will have guidelines and their policies around that. But you'd have signed that deal with Apple and they allowed you. I mean, equity professionals, our school, we can decide to enter a franchise deal with, let's say, Harvard, so that instead of equity professionals, our name will be Harvard. I mean, because of that franchise. So we have entered into a franchise. So that franchise agreement, it is an asset to us and is arising as a result of legal rights. We have signed a contract with the counterparty, with the real owner of that brand, that let us use your name. So we that we are using their name, it becomes an asset to us because to a large extent it will help our business franchise. So it's franchise for franchise, that one is not separable. It's not something you can I can then me, I cannot then go and sell the name to another person. The name that I borrowed, that I say, okay, please let me use your name. I paid a lot of money. I cannot then allow another person to, no, it's not separable. I can't sell it. But it is an intangible asset because it is arising from legal right. It's arising from legal right. So that is identifiable. Okay, it's either separable or arising from legal rights. So we have a lot of intangible assets that are arising from either of these two. The second element here is non-monetary assets. An intangible asset is a non-monetary asset, which means that This means that, this means that the benefit from these assets are usually variable, are usually variable. They are not fixed. They are not fixed. The benefit from intangible assets are variable. That's what makes them non-monetary. So when you hear non-monetary assets, it means that the economic benefits you can get from them, the money you can make from them, something you can predict. It varies. It varies depending on how well your operational activities or your operational activity function. That will determine how much you would ultimately make from these intangible assets. And that is why, this is why, this is why assets like let me say trade receivables, you cannot say these are intangible assets, even though you can't really see them, but you can't say trade receivable is an intangible asset. And it's because trade receivables, they are monetary. And monetary in the sense that the money you get from this type of asset are fixed. You know how much you're getting back. When somebody is owing you money, you know, or loan receivable. It's not like you will see that this is my loan receivable. It's just, it's intangible, right? Or maybe you did an investment in shares. Okay, like all of these are not intangible assets because the amount that is derived from these assets are fixed. They are monetary assets. They are monetary assets. We don't describe such asset as non-monetary. So for an item to be an intangible asset, the benefits you will get from them, you will derive from them is variable. It's not something you can predetermine. Okay? And the final one is that it is without physical substance. It's without physical substance because you cannot see or touch it. You can't see or touch it. Okay, so that's the first part of what we want to do, the definition of an intangible assets. Any question on this one before I move to the next part?
Yes, sir. Sorry, please, can you assist to explain that example, that trade receivable loan? You said they are not intangible assets. Sorry, I don't get that part very well, sir.
Okay, I said that these trade receivables, loan receivables, investment in shares, all of these they are not, we cannot say they are intangible assets because they are monetary assets, because the amount that is derived from these assets are fixed. When you have trade receivables, you know how much you will get back. When you have loan receivables, you know how much you will get back. When you have investment in shares, you know how much your investment in shares is. You know how much you can sell it for. So they have, what you are getting from them are fixed. Even though looking at them, you would think they are intangible. They don't have physical substance. But anything to be called an intangible asset must be a non-monetary asset. What you are getting from them is not fixed. It varies. It varies. And that's what I was saying when I was explaining that. Okay. Now, the next thing here is recognition of intangible assets. Recognition means recording in the books, just like I've explained under PP. And is there anybody in this class who can remind us recognition criteria for PP? Is there anybody in this class that can remind us? What's the recognition criteria for PP?
I think when the future economy can be traced back to the entity and when they can be used more than one period.
Okay, you tried. You tried. We said that it is probable that the item it's probable that, let me put it like this, that future economic benefits associated with the item will flow to the entity. It is probable that future economic benefits associated with the item will flow to the entity. Of course, this is the major future economic benefit. And I explained all this, that this means that you have control. And also, it must have a cost that can be measured, reliably. So the same thing. So if you remember the recognition criteria for PP under IAS 16, good enough. That means it's the same thing here too. The same principle. So I won't go over those ones again, but the same explanation, everything. And that's recognition. The next one is measurements. Measurement. The same thing, everything is the same for PP and intangible assets. The same, there's nothing. The same thing. And, for initial measurements, I taught you initial measurements, yeah? And I told you initial measurement is at what? Costs. The same thing that I taught you under initial measurements there is the same thing here. So, for those of you that have not revised PPE, I don't know, we took 3 classes to teach you that. This is a very important standard. And I hope you still remember the component of costs, the purchase price, import duties, non-refundable purchase taxes, let's trace discount and rebates. Then you have directly attributable cost of bringing the asset to its location and condition. You have initial estimate of dismantling, removal, and restoring the site, borrowing costs, all of that applicable here. Then for initial measurements, the only difference is this. For initial measurements, for intangible assets, if it's a purchased intangible asset, then it is initially measured at cost, just like you've learned before. If it's a purchase, an intangible asset that you bought, like your license, like your patent, like your software, all of that, purchase intangible asset. But if it's an internally generated, if it's an internally generated intangible assets. This one, it is not recognized in the financial statement. This one is not recognized in the financial statements because we cannot reliably measure the benefits derived from the assets and cost incurred to get the asset. So when you have internally generated intangible asset, like let's say your goodwill, or let's say your brand that you built, something like that, those are internally generated assets. Examples are goodwill and brand name. These are not recognized in the accounts because we cannot say this, we cannot measure reliably that this is the amount of benefits we get from this goodwill or brand name. Or we cannot say this is the cost we spent. And when you cannot do that, that means it does not meet this recognition criteria. When you cannot estimate the cost reliably, it becomes a problem for accountants to put it in their books. So if ICANN wants to ask you questions on intangible assets, you see them asking you something around internally generated intangible assets. You see them asking you something around that. So note that they are not recognized in the financial statements because we cannot reliably measure the benefit derived from the assets, and the cost incurred to get the assets cannot also be measured reliably. And I've given you some examples. Another one, let me note this. I would still teach you group account. However, in the consolidated financial statements, this internally generated intangible assets are usually recognized because it is deemed that the group acquired these assets. So they are seen as a purchased intangible asset, and we can reliably determine their costs. So in the consolidated accounts, when we start looking at group accounts, you see that items like goodwill, brand name, they are usually recognized in the books, and they are usually recognized. And this is because it assumes that the group bought it, right? Instead of saying the group, let me say the parents. The parent entity acquired this asset from the subsidiary. So there is a value for it. So they are seen as a purchased intangible assets, and we can reliably determine their costs. So I need you to note that for purchased intangible assets. Then we have research and development. So these are internally generated intangible assets that are usually recognized in the individual entity financial statement. So there is a type of internally generated intangible asset that are usually recognized in the books. We call those ones research and development. So you find it in the individual accounts. See, while research costs are expensed to profit or loss statements, the development costs are usually capitalized as an intangible asset. If they meet the following criteria or conditions. Following criteria or conditions. So you find ICANN asking you this. Note that these conditions can be, let me call it, mnemonized or shortened as pirates for easy memorization. So that you'll be able to know those 6. And what is this? Let me remove this. Can be shortened as pirates. And what is this pirates? P means probable inflow of economic benefits. I means intention to complete and use the assets. R means resources are available. Resources are available to complete the asset. A means ability to use and sell the asset. C means it is technologically feasible to complete it. E means expenses can be identified, related, can be identified. Okay. So still on initial measurement, it depends on, yes, at cost, but you need to get the type of asset. For research and development, these are assets that are usually recognized in the individual entity because we can actually get their costs. We can trace them we know their costs. The assets that we consciously started. It's just like an organization building an app or building a software that you have to engage in a research before you start the actual development, right? So when you have such costs, the research costs, we expense that one to P&L. But the development costs are usually capitalized as an intangible asset. We capitalize those ones after intangible assets, provided they meet the following criteria or conditions. So it's not all development costs that are capitalized. Some are expensed, right? It's only development costs that meet these 6 conditions that are capitalized. and we shortened it as pi rate. Probable inflow of economic benefits, intention to complete and use the assets, resources are available to complete the assets, ability to use and sell the assets. It is technologically feasible to complete it, and expenses can be identified. So you need to know this for your exams. However, if they give you in a scenario like that, the way you would know that these criteria have been met, determination of whether the above criteria is met is anchored on the existence of board approval and regulatory approval. So in a case or in a question one, your exam, as soon as they tell you that this project we want to carry on is already approved by the board, the board has given a go-ahead from it for that project, or there is a regulatory approval for it, that you can go ahead with this project, the necessary regulatory body has approved it, we can presume that these conditions has been met in those cases, and presume that they have been met in those cases. Okay, so that's initial measurements. For subsequent measurements, this is similar to what you learned before. We use cost model and you use revaluation model. Everything I taught you under PPE, everything applies here. Everything. Just that for here now, instead of cost minus accumulated depreciation minus accumulated impairment losses, for intangible asset, instead of depreciation, that will be replaced with amortization. So here, depreciation will be replaced with what? Amortization. That's just the only difference. Aside that, same. Every other thing is the same. Here also, when you have an intangible asset with an indefinite useful life, in fact, most intangible assets like software and all of that, you find out that they have an indefinite useful life. That means you will not amortize them. They are not amortized. And also, for evaluation model, so before an entity can use the revaluation model, it must be determined that the intangible asset has an active market. An active market for which pricing information are readily available. For which pricing information are readily available. So before you can use evaluation model for an intangible asset, we need to be sure that there is an active market for that intangible asset for which you can get price information. Now everybody is aware, everybody knows the price and all of that. And that's not common for intangible assets because intangible assets tend to be very specialized. A lot of intangible assets are technologically based. They are assets people have developed in-house. So you find out that there is no active market for them. There is no market that you can go and you would say that this is where you can get these intangible assets. This is where you get all of them. That is not available. So you'll find out that you'll majorly be using um, cost model, majorly be using cost models. But all the calculation I taught you under evaluation, depreciation, just like depreciation, son of depreciation, we call it amortization here. Everything is the same. Everything is the same. And also, the disclosure requirements that I gave you under intangible assets, under PPE, is the same from the amortization method to the useful life, to the reconciliation of opening and closing carrying amounts. All of that are the same for this one as well. Okay, so and that is it for intangible assets. Now, let's solve some questions before we get this over with. Let me bring in some questions from your class notes. So let's look at this question. This is a past question anyways. Question says that, says intangible assets by their nature do not exist physically under IAS 38, intangible assets do not physically exist. The following information on initial cost of intangible assets were extracted from the notes to the financial statement of Igbowood Limited, a film production on January 2017. So we were given these intangible assets. And they gave us some additional information, some intangible assets, their date of acquisition, and their useful life. And they said the intangible assets are amortized on a straight line basis. We are then required to calculate the cost of the following intangible asset: market-based, customer-based, artistic-based, and all that. They also asked us to calculate the carrying amount of the intangible assets. Okay. So the first one asks us to calculate the cost of the intangible asset based on the following categorization. Even though this question is not because the standard did not categorize intangible assets in this format, but let's just solve it. Market-based, customer-related, artistic-related, contract-based, technology-based. So let's just look at the questions and apportion it where they belong. The first one, which is books and literary works. Where can this one fall?
Artistic, sir.
I didn't hear you. What did you say?
I say it falls under artistic.
Okay. That's for books and literary works. Statistics, that's correct. And how much is that? 800.
800.
The second one, which is QuickBooks and Sage. Where can that one fall here?
Technology.
Okay, I agree. And fall in technology. The next one, which is patents. Patents. When you do an invention and you go to the government to secure it in such a way that no other person can actually use it.
Market-based.
Market-based. Yeah, I think I agree with you. That's patent, Abi.
Yes, sir.
So what's the next one? Video and motion picture films. Where can this one fall?
Statistics, sir.
Statistic.
Yeah, I agree. Artistic. How about franchise? Where can franchise fall here?
Is it technology or franchise?
It's
Contract-based.
Yeah. It's contracts. But you must have entered the contract with the government. What about pictures and photographs?
Statistics.
Artistic.
That's correct. Artistic. What about order or production backlog?
Customer
Production
base.
backlog. With your customers. Okay.
Customer related.
Yeah. I'll fly. What's the next one? Place.
Artistic.
Statistics.
Yeah, that's correct. What's the next one? Customer contracts.
Customer base.
Customer related.
Why not contract related?
Okay.
Since they said is a customer contract, so let's put it there.
Okay.
If you actually put it in customer too, we would also mark that for you. What about trademarks for customers?
Customer related.
Yeah, put it customer related. What about broadcasting rights? Broadcasting rights. Contract.
Contract, yeah.
You have a contract with the person that gave you the rights. How about internet?
Technology.
Yeah. What about trade secrets?
As a market.
Markets. Why markets? Is it
Deal
not
with
that?
trade.
Well, I just prefer because trade secret is an invention.
Okay.
So It's more of technology. So the reality is this. Our selection is very subjective. It's extremely
Okay.
subjective. So this question, the diet came out. They have not asked any question like this before because they won't ask something that even when they were providing the solution self, they didn't get, people were arguing around where it should be. So they just gave students full marks, students that attempted it. Anywhere you put anyone, they mark it for you. That was what happened eventually on this particular one, that died. However, for the second one, we're asked to determine the carrying amount of the following intangible assets. So the first one is QuickBooks and Sage. So the B part of the question, determine carrying amounts. Everybody here knows that carrying amounts, let me write the name, QuickBooks and what? And Sage. Everybody here knows that carrying amount is cost minus accumulated, in this case, amortization. I can put it like this. Costs. Can put the cost here. I can put the accumulated amortization here. I can have the carrying amount here, just so that I'm not writing it over and over. So for QuickBooks and Sage, how much is the cost of these assets for QuickBooks and Sage? That's 950, right? 950. What's the accumulated amortization for QuickBooks and Sage? So they gave us some useful life. So for QuickBooks and Sage, we bought it in 2016, and the useful life is 5 years. And this is 2017. That means we bought it like 2 years ago. So to get the accumulated depreciation, you will just do 950 divided by the what? The useful life, which is 5 years, multiply by what? Because 950 divided by useful life will give you the cost per annum. Then multiply it by the number of years. So since we bought it in January 2016, so we'll have depreciated for 16, 17, because we are doing this kind of amount in 2017. So depreciation of 2 years. So how much will this give you? Anybody with calculator?
380.
380.
380. So what's the carrying amount? What's 950 minus 380?
570.
570. Okay. The next asset is trademarks. Trademark. What's the cost of the trademark? Where is it? Okay. 46. The cost
4,600.
600. So for trademark, we're told we bought it in 2015 and the useful life is 8 years. If this is 2017, that means we need to amortize it for how many years to get the accumulated amortization? 15, 16, 17. That's 3 years. So we'll do 4,600 divided by, what's the useful life again?
8
8.
years.
8 years. 8 years.
8 years multiplied by
3 years.
3 years. How much would that give us?
1,725.
1,000.
1725.
So what's the carrying amount then?
2,875.
2875.
875. Okay. What's the next one? Place. Place. So what's the cost of place? This is 4,200, right? So 4,200. And the information given to us, we bought this place in 2014, and the useful life is 7 years. So that's 14, 15, 16, 17. That's 4 years ago. Okay. That will be 4,200 divided by the useful life, which is 7 years, multiplied by the number of years it has been in operations. That's 4 years. So how much are we looking at?
2,400.
2,400. So what's the carrying amount?
1,800.
1,800.
Yes, sir.
Then the final one is franchise.
1,400.
Final one is franchise. What's the cost of this franchise?
32.
This 3,200.
Size 36. I know it might be a little bit big for him.
So what's the useful life?
She has gone home.
The useful life is 8 years, right? And we acquired it in 2013. That's how many years ago? That's 5 years ago. 13, 14, 15, 16, 17. That's 5 years ago. So that's 3,200 divided by how many years? 8 years.
Times 5.
Times 5 years. How much is that?
2,000 naira.
2,000.
So this gives us how much?
1,200.
1,002.
Okay. And that's the end of this question, of this particular one. Then C says identify 4 internally generated intangible assets that are prohibited for recognition in IAS 38. So what are the intangible assets internally?
Okay. I wanted to say you should let me lock the door.
Internally generated intangible assets. So what are the examples that we have? That are prohibited. Let me give you one. Goodwill.
Brand name.
Brand name.
Name. Yeah. I've given you 2. Give me 2 more.
Customer list.
Yeah, that's correct. Customer lists, yes. Which one again?
Copyrights.
No, you usually buy that one.
Okay.
What about trade secrets? Trade secret also can also be prohibited. Okay, now let's solve another question. This is also a past question. Well, the guy that reads for us, can you please read?
Good evening, sir.
Hi, Dami.
It's Femi.
Oh, Femi.
Yes, sir.
Okay,
Okay.
please read.
An extract from the non-current asset schedule of Easy Nigeria Limited at first July 2019 were as follow. Cost valuation, freehold property, 995 million, sorry. Office equipment, 525. Computer software, 1,100,000. Accumulated depreciation or amortization, we have 1,000 under free house property, 100,000 under free house property, 334 under office equipment, 110 under software computer software. Then the carry amount, 895 under free house property, 191 under office equipment, 990 under computer software. Other relevant information. Number one, the computer software license was acquired from Microsoft Zap Incorporated USA on July 1st, 2018, and has 10 years lifespan. In June 2020, a review of the sale of the computer software showed a very big decline in patronage. As a result of the new sorry, sir. As a result of the new estimated recoverable amount of the license as at June 30, 2020, was 333 million. The license is amortized on a straight line basis. Relevant information 2. The freehold property consisted of land and buildings, which were revalued a few years ago for 395 million, attributable to the land and 600 million to the buildings. On the date, the estimated remaining useful life of the building was 24 years. However, a second revaluation of the freehold property on July 1st, 2019, 410 million, attributed to land and 560 to buildings, and 20 years as estimated remaining useful life for building. The third one, on January 1st, 2020, an item of office equipment was purchased for 128 million, and a further 22 million was spent on commission and installation of equipment. Annual depreciation is charged at the rate of 18.5% on cost and is appropriately apportioned on time basis as situation demand. There were no disposal of non-current assets during the year to June 30th, 2020. Let me scroll up, sir. Hello. Okay, you are required prepare the comparative figures statement of financial position extract of Easy Nigeria Limited as at June 30th, 2020. Show relevant note for PPE and intangible assets, 9 mark.
Okay, thank you very much, Femi. So, all this for 9 marks. Let's see. So, this question, they want you to prepare with comparative figures. I think everybody can mute now, right? They want you to prepare with comparative figures, statement of financial position extract of Easy Nigeria Limited as at June 30th, 2020. Okay, so majorly they want us to prepare statement of financial position. And we're required to show relevant notes for the PP and intangible assets. Okay, fine. So, which period are we looking at? Okay, June 30th, 2020. So they gave me an extract of a fixed assets schedule of Easy Nigeria Limited. That the examiner called it fixed asset register. That's wrong. This is not a register. This is a schedule. So at 1st July 2019, so this is like the beginning of the year. So they gave me the opening figures for freehold property, office equipment, and computer software. So these are the costs, and these are the accumulated depreciation or amortization, and this is the carrying amounts. So they gave us some other information. We're told that the computer software, I think they are speaking to this now. So the computer software license were acquired from Microsoft Zap Incorporated on July 1st, 2010, and it has 10 years lifespan. We're now told that in June 2020, which is the end of the year, they said a review of the sales of the computer software showed a very big decline in patronage. As a result of the review, estimated recoverable amount of the license as at June 30th, 2022 is now 323 million. So the license is amortized on a straight line basis. So let me deal with this. I think they give this, they are all dealing with separate items. So let me deal with the computer software first. Let me call this my notes. Okay. So my computer software. So basically, they want me to prepare statement of financial position. So that means what I need is the carrying amount majorly at the end of this year. So which is quite straightforward. For this one, without even doing any workings, I already know the answer. Because the answer is 33333. Because they revalued these assets. And the value, they already gave me the value at the end of the year as 333 million. So I don't even need to do any stress if you know what you're doing in the exam. So the carrying amount, if they had asked me to prepare statement of profit or loss, I will have still followed through just so that I can get the depreciation for the year, as well as, I think there's an impairment loss here. There's an impairment loss here. But if you do that, you don't have time in the exam. This is a past question. You would be wasting a lot of time. So the carrying amount at June 30th, 2020 is the revalued amount. Is the revalued amount of how much? 333 million. And that's for the computer software. For the freehold property, we're told that the freehold property consisted of land and building, which were revalued a few years ago for 395 million attributable to land, 600 million to building. When I told that on that date, the estimated remaining useful life was 24 years. However, a second revaluation of the field property on July 1st, 2019, which is the beginning of this year, is 410 million attributed to land and 560 million to building. Okay, and 20 years as the estimated remaining useful life for building. Okay, so how do we get the carrying amount in this case now? Knowing fully well that I was given the revalued amount of these assets at the beginning of the year, 410 to 560. I think that was where they got this 995 from. The field property. field property 410 plus 560. What would that even give us? A second evaluation. That means I have not impacted this. So is this one they still have as the cost? The 395 plus the 600. Okay, yeah, that is what it should be. That's the 995. But now it has been revalued to this 410 and 560. So how do I deal with that? So for the freehold property, I think it's advisable to separate it into land and
Building.
building. So here, my issue is not calculating revaluation surplus or deficits. I'll be wasting time here because it's not needed. What I need is the carrying amount of these assets. And I know that since the value of this asset at the beginning is this, and they told me that the remaining useful life is 20 years, I think I'm done with this approach. So with that, at the beginning, the revalued amount for land was how much? At the beginning of the year, 410. And for building, let me say 410. Let me put thousands. For building is 560. Then I will deduct my accumulated depreciation. Land is not depreciated, so this will be 0. Building will depreciate building. So I want to work this out for building. That will be 560 divided by the remaining life, which is 20 years. So how much is that?
20,000.
That's 20,000. So
Site 28,000.
28,000. So what's the carrying amount for the 2 years? This is 410,000. And how much is this?
532,000.
532,000. So the carrying amount of the freehold property, so the total carrying amount is the addition of the two. So what's the addition of the two? 410 plus 532. What does that give us?
942.
942.
942.
942. Okay, so that's that. Somebody is asking a question. Let me read out the question. He said, please review useful life for computer software in the question. Yes, now. I said the question already gave us the value of the asset at the end of the year. So which is what we need. So any other thing you're doing is just to calculate depreciation. We don't need that. So we need the value at the end of the year. They already gave us. So that's why I didn't bother with any other thing. It would just be a waste of our time. Because that's not, if they ask us for P&L, that's when I can be calculating depreciation, impairment loss. No, they didn't ask us for that. So if you know what you're doing, just pick up your points, then move to the next one. Even this one, If they had asked me for P&L and all of that, the first thing I would have done was to do my evaluation deficit or surplus because there was a evaluation at the beginning of the year. But I don't need all of that. So this is a past question. Don't bother doing all of that. So I just started from these values here, removed my depreciation for the year, and I got my carrying amount. You don't want to waste time in the exam. The third one, which is office equipment. Office equipment. So what did they tell us about office equipment? So they told us that on January 2020, that will be during the year, an item of office equipment was purchased for 128 million, and a further 22 million was spent on commission and installation of the equipment. Okay. Annual depreciation is charged at the rate of 18.5% on cost and is appropriately apportioned on time basis as situation demands. There were no disposal of non-current assets during the year. Okay. So what's this talking about? So this majorly is talking about acquisition during the year. So there was an addition, like a subsequent cost, something like that. So, and depreciation is on costs. And they ask us to apportion it on time basis. Okay. So now, first, let me compute my, should I do it? Let's do it like this. So the costs at the beginning was how much? The cost at the beginning for this office equipment was how much? 525,000 at the beginning. This is it. And during the year, there were some additions. They bought assets during the year. They bought an office equipment for 128 million. So this will be capitalized. It's an additional. And a further 22 million for commissioning and installation. Yes, this will also be capitalized because it's a directly attributable cost of getting the asset ready. We usually capitalize installation costs. So this 22 million will be capitalized. So if you add 128 plus 22, that gives me 150. They told us there was no disposal. So that means my cost at the end of the year is actually 675,000. Okay, that's the cost of the asset. Then from this cost, I will need to determine the accumulated depreciation. For my accumulated depreciation, what was the accumulated depreciation at the beginning of the period? Is this 334,000? This one? This 334 here. 334. Then I will calculate my depreciation for the year. And how do I calculate my depreciation for the year? Depreciation is charged on straight line basis. Question told us 8.5% on costs. Yeah, look at it. I highlighted it here. 18.5% on costs. So ordinarily, my depreciation should just be 18.5% on this cost here, which is 675,000. But if I do that, I'll be wrong, right? And the reason why I'll be wrong is that these two assets were acquired during the year. Because of that, the depreciation we're going to charge on them will be prorated. To be prorated. because they were acquired on 4th January 2020, and the year end is June 30th, 2020. And the question says that that depreciation is charged at 8.5% on costs, and this depreciation should be appropriately apportioned on time basis, meaning they want you to prorate it. So these costs that came in during the year, they were only there for 6 months, so we should give them 6-month depreciation. So it would be wrong for us to just calculate this 18.5% per annum on everything. So we need to do it separately. First, this 525, this one can take, because this one has been there for the whole year. So the 525 can take full depreciation, that is times 12/12, something like that. But the other guy, the 18.5% on the 150,000, those ones have to take 6/12. They came in during the year. So January to June. We need to prorate those ones. So can you tell me the figures? How much for this?
97,125.
And how much for this?
That's 150. 13,875.
13,875. Okay. So let's add together. Let's assume I extend the cost here. So let's add 334 plus 97125 plus this. What does it give us? Why is it taking so long to press this?
445,000.
So, sorry, again, come again.
445,000.
So with this now, I can determine my carrying amount. So how much is my carrying amount?
230,000.
230.
30,000. Do you have any questions? Okay. Let's then prepare the statement of financial position as required in the question. They ask us for June 2020 and June 2019. So for the office equipment, we got the 2020 as 230, which is this. Then the opening from the question was 191. So that's for the office equipment. For the freehold property, For this June 2020, the carrying amount for the field property was how much? 942. 942. And the opening was from the question we can get at 895. Opening is 895. Then for the computer software, the closing was 333 million. For the opening from the question, that's 990. Okay, so as that year ended, 30th June 2020. Okay, so that's the end of this question. That's the end of this question. So this question is like a revision on some things that we have learned before now. Okay, let's solve one more question, then I'll allow you guys to go. Or maybe I can decide to start another topic. So, Femi, please read this question for us.
Question, okay. IAS 38, intangible assets, allows a business to choose one of two measurement model as its accounting policy for intangible assets after acquisition. However, the same model should be applied to all assets in the same class. Required. Discuss the two measurements model for intangible assets. That's for 3 mark. B, I should read all the questions. Okay. B, Olumo Taxi Limited, financial year ends on 31st December. On every 31st of December, the company adopted the revaluation model for its intangible assets and revalues them on a regular 3-year cycle. However, for tangible assets with a finite life, Olumo Taxi Limited transfers the relevant amount from revaluation reserve to retained earning each year. During year 2019, Olumo Taxi Limited incurred 700,000 on the process of preparing an application for license for 15 taxis to operate in an holiday resort very close to Abeokuta. In order to prevent congestion, the excessive traffic population, the licensing authority only allowed a small number of taxis to operate. The outcome of the company's application was uncertain up to November 30th, 2019, when the local government authority accepted its application in December 2019. Olumo Taxi Limited incurred a cost of 90,000 naira in registering its license. The license were for a period of 9 years from January 1st, 2020. The licenses are freely transferable and an active market in them exists. The fair value at December 31st, 2019 was 94,500 per taxi, and Olumo Taxi Limited carries them at fair value in its statement of financial position at 31st of December 2019. At December 31st, 2022, Olumo Taxi Limited undertook its regular revaluation. On that date, the licensing authority announced that it would triple the number of licenses offered to taxi operators, and there were transactions in the active market for license, which has 6 years to run at 45,000 naira. You are required. Calculate the explanations, the carrying amount, and revaluation surplus of the intangible assets of Olumo Taxi Limited according to IAS 38 as at December 31st, 2019. Second, 31st December 2022, that's before regular revaluation. Third, 31st December 2022, again, after regular revaluation. 12 mark, total 15 mark.
Okay, so these are the type of questions you would see in your exams. So I think it's just wise for us to start solving them early enough and getting used to how questions come in the exam. So this is 15 marks in total. The first part, I think that one, everybody should be able to get 3 marks. Then the second part, each for 4 marks each. So depending on how smart you are, we'll see how we can maximize that mark. But let me show you how to get 15 over 15. The first requirement says that discuss the 2 measurement models for intangible assets. So for that, this is how you get the entire 3 marks. So you say measurement models for tangible assets. Number 1, cost model. Say this is cost minus accumulated amortization minus accumulated impairment losses. Also, you see the revaluation model. Say this is the valued amount or fair value minus subsequent. If you don't put the subsequent, you're very wrong. Subsequent accumulated amortization minus accumulated impairment losses. That will give you 3 marks for the A part. The B part, this one says calculate with explanations. The carrying amount, the evaluation surplus of the intangible asset. At least they have told us exactly what they want. Carrying amount and evaluation surplus. For 2019, 2022, they now said before evaluation and 2022 after evaluation. Okay, no problem. So how do we go about this? We're talking about Olumo Taxi Limited. Said if financial year ends on December 31st, the company adopted the evaluation model for its intangible assets and revalues them on a regular 3-year cycle. Okay, so they use evaluation model. They now said, however, for intangible assets with a finite useful life, with a finite life, Olumo Limited transfers the relevant amount from reserve to retained earnings. You have to be very careful here because the examiner specifically told us that they usually transfer evaluation reserve to retained earnings. If you remember, that's talking about excess depreciation. If you remember excess depreciation, that I told you that normally evaluation surplus is unrealized that we take to OCI, and I said we would usually realize it when we sell the assets. That is when we realize it by transferring it to retained earnings. But I then mentioned that it's possible that we can start realizing it over the remaining years of the assets by saying the surplus divided by the remaining life. Then with that, we can be transferring an amount every year from reserve to retained earnings, which is what the examiner is supporting here. And when they tell you this, that means you have to do it. Good. Now, they said during the year 2019, they said this guy incurred 700,000 on the process of preparing an application for licenses for 15 taxis to operate in an holiday resort very close to Abeokuta. And I've said, in order to prevent congestion and excessive traffic pollution, the licensing authority only allowed a small number of taxis to operate. We're told that the outcome of the company's application was uncertain up to November 30th, 2019, when the local government authority accepted its application. In December 2019, Olumo incurred a cost of 19,000 in registering its licenses. The licenses were for a period of 9 years from 4 January 2020. You see, from these two paragraphs, what I can see here is this. This guy is trying to get a license, and he picked up an application, he incurred 700. But all the costs, he was not sure whether they will grant him the license until November. He was not sure. So it was after November 30th, meaning December, that was when he's sure that they will accept they would approve his application. Yeah, so he then incurred 90,000 onward. You see, the interpretation of that is this. The interpretation of that is this. That's because the company is uncertain as to whether its application will be approved until November 30th, 2019. Means that any cost incurred prior to this date must be expensed. So the 700,000 incurred on application will be expensed to profits or loss. Any cost incurred after November 30th, 2019 can then be capitalized as an intangible asset. Hence, the 70,000 incurred on the registration will be what? Will be capitalized. So the only cost we are going to capitalize here is that 70,000. I said 70. Is it 70 or 90?
90,000.
Is that 90,000? That's the only cost that will be capitalized. The other one will not be capitalized. Okay? And that's what we are being told here. Now, second paragraph. We're told, okay, Femi, go ahead, please.
Yes, thank you, sir. So
Yeah.
I want to know the rationale between why was the 700,000 not capitalized? That's number one. Number two, I didn't mean that this immediately he applied for this license for the 15 taxes, and maybe following month it was approved. Is the 700,000 going to be taken into consideration or capitalize it?
Okay. So it will not be capitalized. It will not be capitalized. So for intangible assets, I mentioned when I was teaching you research and development that the development cost must meet certain criteria. It really applies to all intangible assets. That before you can start capitalization, you need to have had regulatory approval and board approval. Any cost you incur before you get regulatory approval, before you are certain that you will get regulatory approval, would be expensed.
Okay.
So here now, the 700,000 that he incurred during the year will be expensed because he wasn't sure. He hasn't gotten regulatory approval. He was only sure that he would get it after this date. Okay? Because it was this date that they accepted his application. So any cost he incurred before that date is expensed. It's only cost incurred after that date that will be capitalized. So anyone incurred before the date shall be expensed. So even if it is next month, except if you are sure 100% that they don't deny approval, that they will always approve, then why not? You will capitalize it. But if you aren't sure, that is just whether they will approve, you expense that. You expense that in cases like this.
Okay. But before I was thinking is the company director that you are talking about, if they approve the company to go ahead and purchase the license. I was thinking you are talking about the company's director. That's what I was thinking before, but I didn't know that it's external regulatory body that you are talking about.
It's the two, both the board approval and regulatory approval. You need the two to start capitalizing any cost incurred on intangible asset.
Okay, sir. I understand.
Okay. So going forward, so I'm on this paragraph. So we're told that the licenses are freely transferable and an active market in them exists. The value at December 31st, 2019 was 94,500 per taxi, and Olumo Taxi Limited carried them at fair value in its financial statements, financial position at this date. Okay, so now we are now told that they give us the fair value because they said the licenses are freely transferable and has an active market. So that means this guy can actually use the valuation model. If you remember, I told you before an entity can use the valuation model, the assets, the intangible asset must have an active market where pricing information are readily available. And yeah, so this one has. So they gave us a fair value of 94,500 per taxi. How many taxi are we talking about? 15 taxis. So for each taxis, they said the market value of the licenses for each of them is 94,500. So, and that will be at fair value as at December 2019. So now, I can then calculate my carrying amount. Okay. Let me start with so first, my carrying amount at 31st December 2019 will be the fair value of the taxes, which is calculated as below, That will be 94,500 per taxi multiplied by 15 taxes. And how much is
Times 50.
1,417,500.
1,417,500.
Okay. So we can then get the revaluation surplus or deficits by comparing the fair value above, which is 1,417, with the costs of these intangible assets. And what's the cost of these intangible assets?
90,000.
Yeah, correct.
90,000.
So what's the revaluation surplus in this case?
1,327,500.
132,7,500, right?
7,500.
Okay, good. So since the company usually, or since it's the company's policy, it's the company's policy to transfer revaluation reserve to retain earnings.
To retain.
So the amount that will be transferred can be calculated as below. So it will be the revaluation reserve divided by the remaining useful life. And since the revaluation reserve is 1,327,
Useful life. Okay.
and what's the remaining useful life? From 1st January 2020, 9 years. Abi? 9 years. So divided by 9 years. So how much is that?
147,500.
So every year, we'll transfer this amount from revaluation reserve to retain earnings by debiting the revaluation reserve, crediting
Retain
earnings. So that's that for this one. The last paragraph says that at December 31st, 2022, the company, Olumo Taxi Limited, undertook its regular evaluation. On that date, the licensing authority announced that it would triple its number of licenses offered to taxi operators, and there were transactions in the active market for licenses which are 6 years to run at 45,000. Okay, so this is the new license. New This is the fair value of the license. So the question says I should calculate the value before evaluation. So let me leave this evaluation for now. Let me calculate at 31st December 2022 before revaluation. First, let me determine my carrying amount before evaluation. First, the fair value in the last revaluation was how much? 1,417,500. Abi? That was 3 years ago.
Yes, sir.
Yeah, that was 3 years ago, 2019. So now we have used 2021, 22. So that means the accumulated amortization would be 1,417,500 divided by the useful life. What's the useful life of this guy? That was 9 years. Multiplied by how many years has he used? 3 years.
Yes.
3 years. So how much are we looking at for this?
472,500.
472,500.
Yes, sir.
Okay. So what's my carrying amount?
$945,000.
945,000. Okay. That's my carrying amount. Again, what would be the balance in my revaluation surplus? So the balance.
Excuse me, sir.
Yes, Joseph.
Excuse me, sir.
Yes, Joseph.
I think the main amount, that is the accumulated depreciation, is 442,500.
Okay. 442,500.
Not 472.
Have you all confirmed?
Yes, sir.
Okay, thank you. Then if that's the case, then this one should be 975 now.
No, sir. It is 472,500. 1,417,500 divided by 9 multiplied by 3.
Seems, sir.
Oh, okay. All right. So Joseph, I think we are good to go. So what's the balance of the evaluation surplus at the last calculation, which is December 2019? We calculated it as this, 132,500. And remember, we were doing transfer to retained earnings of how much per annum?
147.
Of 147.
500.
500. So we'll have transferred for how many years? For 3 years, because this is after 3 years. This is 2022. So how much have we transferred in total?
That's 442,500.
Okay, so what will be our balance of evaluation surplus?
884,500.
885.
884,500.
884,500. So this is the balance of my evaluation surplus as at 2022. Secondly, the question asks us to also determine these amounts after evaluation. So, which is this after evaluation. So now, since they have revalued the asset to 45,000. So at 45,000. So let's get those ones. So that means the fair value of the tax is now 45,000. times 15 taxes. How much is that?
675,000.
875.
675,000.
675,000.
Yes, sir.
Compare it with the carrying amount as at that date, which we already computed up here. This one, 945. So compare with 945. This would be a revaluation deficit. So this will be a revaluation deficit of how much?
270.
270,000. So this revaluation deficits will be transferred to where?
Yeah, no.
No, you first remove it from your
Okay,
OCI,
the surplus.
from the
Thank
surplus.
you very
Then,
much.
if there's balance, you take it to P&L.
Thank you very much. Thank you very much. Now I can see people that are reading and people that are not reading. Semiat is not reading. We transfer to other comprehensive income to net off against the what? The revaluation surplus. While the carrying amount of the license is how much? The fair value of 675,000. So you see, this question, the way it is, the examiner says that calculate with explanations. So don't just everything in your mind. And the way I'm solving things for you guys, I'm just solving it like I'm doing it very casually. It's not a scripted answer I'm giving you. I'm giving you like the answer I'm giving you. If I'm going to teach another set of people, it's not the way I'm writing it. I will have written it. I'll write it in another way entirely, but it's still the same thing. It's just the way I'm able to construct those answers at that point in time. And that is how to go for an ICANN exams. An ICANN exam, the way I'm doing this solution for you is actually should be your line of thought. It's not about cramming, it's not about rote learning that, okay, this has to be the first step, this is the second step, this is the third step. You cannot pass financial reporting like that. It's not possible. It's not. You need to understand it and be able to express it. And we're able to do so in line with what the examiner wants. They want us to explain, not just calculate. So we explained every point, we calculated it thereafter. We explained every point, we calculated it thereafter. And exactly what we want you guys to do. Okay, so I think we have done well. We still have like 30 minutes, yeah? I'll just allow you go, knowing fully well that you have a 7:30 class. For those of you doing FM, that's not an excuse anyways, right? But since we have done very well for ourselves today, yeah, good job to us. We are done with IAS 38. So tomorrow we can graciously start financial instruments, right? I just want to start it. Based on my plan, I'm not supposed to do that. I think I'm supposed to do IAS 36 impairment, but I just want to take off that financial instrument off it so that you can start practicing it. So it's a little technical, so I want to do it early enough, right? And based on my plan, I'm supposed to do group accounts in August. I think I'm going to move it a little further because group account is not that important like that. It's just a 20 marks question in the exam. So I'll move it a little further. Let me use August to do some major standards. Like I want to take off income tax. I want to take off provisions. I want to take off revenue. I want to take off even earnings per share. I want to take that off. And I also want to take off IFRS 16 on leases. And so those are like major ones. Then I can then do group accounts. Then I know I'm left with all these minor standards, IAS 8, IAS 40, IAS 23, all of those ones like that. Then we can easily ease up those. Then ratio, then sustainability reporting framework, then IT reporting like that. We would finish the syllabus. Yeah, I have a complete picture of exactly what I want to teach you and how I want to teach you. And I know exactly what you need to do to pass. One of them is ensuring that you solve my assignments. Not only that, you see, it's important that at bare minimum, you're able to solve past questions from 2015 to date. If you can do that, the exam will be a walkover for you, not only for FR, but for the spectrum of all courses you're sitting for, to go a long way to assist you in ensuring you pass and you don't repeat this course. It's very sad not to pass. So do whatever it takes from today onward to ensure you pass, right? Okay, so thank you for listening. We'll see you tomorrow. Bye.